So as Jay mentioned, Skeena's had a lot of exciting news lately. We just announced a new resource on our Eskay Creek project and a deal with Hochschild, which we're very excited about too. So before I jump into the projects, I just wanted to talk briefly about the Skeena team. When Walter Coles became the CEO of Skeena in 2015, he really took a team approach to creating a company, and we've successfully built out a really strong management team. Skeena now has 2 past producing mines in the Golden Triangle of British Columbia. In order to advance those forward, you really need a team that can do that. So I'm pleased to say we brought in a new VP of Exploration and Resource Development, Paul Geddes. He left Barkerville Gold just in March to come join Skeena. We've also brought on a VP of Sustainability, who deals with all our First Nations, community relations, permitting, and environmental issues. But then aside from building out a new, younger, keen team, we're happy to still have Rod Nichols with us, who's our chief geologist. He put the first drill hole into SNIP back in the 1980s. So it's been a really great blend of younger, keen, and driven, and then having the sage expertise of people like Rod Nichols and our chairman, Rod Nedolitsky, who discovered both SNIP and Eskay Creek. So with that, I'm going to jump right into our projects. We have 3 projects in the Golden Triangle of British Columbia. GJ is a copper-gold porphyry project. We have a PEA out on this project. It's not our main focus right now. Our main focus is SNIP and Eskay Creek, and we're actually actively looking to either spin GJ out into a copper-focused company or look for a partner to advance that, because we found that lower grade copper porphyries and high grade gold deposits don't really appeal to the same investors. So our focus has really been SNIP and Eskay Creek. So I'm going to jump right into Eskay Creek. Eskay Creek was the highest grade gold producer in the world when it was in production back in the late 90s and early 2000s. It produced 3.3 million ounces of gold at a staggering 45 grams per ton and 160 million ounces of silver at over 2,000 grams per ton. So our thesis was acquiring this was quite simple. What mineralization was left behind that was below the extremely high cutoff grades that existed when this mine was in production? So there were 2 styles of ore that came out of Eskay Creek. One was mill feed, so anything that went through the mill had a 12 to 15 gram per ton cutoff, and anything that was direct shipping ore had a 30 gram per ton cutoff. So anything that was below those cutoff grades was left behind, and one of the reasons is this area was quite remote, and I've got a video that I'll show you about the changes in infrastructure that have happened since these mines were in production. So we just signed an option deal with Barrick in December for this project, and I'm pleased to announce we put out a maiden resource estimate just last week. So without any drilling, we were able to put out a resource estimate, and that's because we inherited over 700,000 meters of assay data. So it was just with that data alone that we were able to put out a resource. And we're in the middle of a 5,000 meter surface drill program right now. There's a lot of inferred resource that we'd like to bump up to indicated, and we're also taking metallurgical samples. So with that, we'll jump right into a video. It's going to show you the Golden Triangle, which is an area I'm sure you guys have heard a lot about lately. It's really hot, which is great, except that it takes quite a while to get your assay results back, unfortunately. So GJ's at the top there, and then SNIP and Eskay Creek will show up. So I talked about the changes in infrastructure. Highway 37 is going to show up here. It goes all the way up to Imperial Metals Red Chris mine. There's also a new 287 kilovolt northwest transmission line that brings power all the way up to Red Chris. We have access roads that come all the way to Eskay Creek, and there's a 17-kilometer gap to SNIP. And then lo and behold, within the last 5 years, 3 hydroelectric facilities have been built in between SNIP and Eskay Creek. So huge changes in infrastructure. It makes a big difference. So we're going to zoom into the project here so you can get a bit of an idea of the topography. And then we were able to take some drone footage about a month ago. So that kind of shows you the terrain that we're working on. So it's for this part of the world, it's pretty easy. There's no glaciers that we have to deal with. We're not on the side of a mountain. It's pretty flat. We're going to pop up on one of the drills here. This is the 21A zone where we've been focused on infill drilling. That shows you where the drill pad is. So we're going to go to the underground workings now and look at the new resource that we just put out. So anything in gray is the historically stoped out areas or any of the underground workings. They're sealed off right now. We've been drilling from surface. And then anything in the color is the brand new resource that we've just put out. So there's about 1.1 million ounces of underground resource and about 800,000 ounces of open pittable resource. So the total is about 1.9 million ounces between indicated and inferred. In the red there, that's the 21A zone that I just mentioned. That's the open pit area. There's never been open pit mining in Eskay before because the cutoff grade was so high. And then we're going to zoom out a bit more, and further to the south, you can see the 22 zone, which is where the second open pit is. So it kind of gives you an idea of the extent of the mining area. I mentioned there's indicated and inferred. I think it's just over 1 million that's an indicated and 850,000 in the inferred category. So the drilling that we're doing right now will focus on bringing that inferred resource up to the indicated category. And then we've also started metallurgical drill testing, because we know that's one of the questions we get a lot about SK Creek is the metallurgy. So we started metallurgical work, and we should have results out this winter. And I just wanted to show you some of the results that we've gotten to date. So we've drilled in the 21A section here. Some of the spectacular results that we just put out a couple weeks ago, I've just highlighted some. 18 grams over 34 meters, 22 grams over almost 35 meters, 43 grams over 27 meters. So this really is a world-class deposit with some spectacular grades, and we should have more results out this coming week, and then through into probably coming up to Christmas time, because we hope to start drilling here till the end of October, beginning of November. So that's a very quick overview of SK Creek. And with that, I'm going to jump into our SNIP gold project. So unlike SK, which we have an option deal on with Barrick, we actually own SNIP 100% outright. We acquired it from Barrick in July. Again, historical past producer, 1.1 million ounces at 27.5 grams. We once again inherited quite a lot of historical data, over 280,000 meters and 8,400 meters of underground development, which you can see here. So everything in gold is what's been mined out, and then everything left behind in blue is any material left behind that's greater than 5 grams per ton over 2 meters. It's because we think 5 grams would be about the cutoff grade we'd be using now, and 2 meters would be, about a minimum mining width. So as Jay announced, we were very excited. We just announced a deal with Hochschild, which I'm not sure is a company a lot of you would be familiar with. They're Peruvian miners, and they're about the best in the world at narrow vein, high-grade underground mining, which is exactly what SNIP is. So we're very excited. We met with them, and they kind of understood SNIP right away, and we take this as validation for the project. So they made an equity investment into the company for 8.3% of Skeena, but then that also earned them an option on the SNIP project. So they have 3 years to decide if they want to come in for 60% of the project, and that would be by spending 2 times what we've spent on the project. So it's a bit of a moving target. The longer the wait, the more they'll have to spend on it, but we're very keen to have them involved, and we're also going to have a member of the Hochschild board on the Skeena board as well. So I'm just going to run you through 2 quick cross sections, to show you some of the results that we've had out to date and what we can expect in the future. So I'll run you through section 4660 here. This is an exciting new area that we're calling the 200 footwall zone. So we drilled a surface hole in 2016, tagged into 16 grams over 13.5 meters. Sure enough, when we pulled up all the historic data, there's a cluster of drill holes in that area, and then also a marker horizon, and that's called the biotite spotted unit. And the only other place you see this is in the twin zone, which is all the gray on the left-hand side there, which accounted for about 700,000 ounces at about 29 grams that was historically mined. So this is an exciting new target. We've drilled it off on about 100-meter centers right now. We've hit major structures. We're going to go back underground this winter and drill it off on closer spacings to further define the mineralization, but it's an exciting new area that we're looking at drilling. But our main focus has really been the eastern twin zone. So this would be the eastern and northern extent of the historically mined twin zone. It's a bit lower grade, but it's still quite high grade, as you'll see by some of the results we've hit. We've had a lot of comments about continuity and not sure if the veins will hold together, and I'm pleased to report we've been able to show pretty spectacular continuity. So these are results we put out a couple months ago: 16 grams over 12 meters, 11.8 grams over just over 12 meters, almost 35 grams over 3.5 meters. So we're hitting grades and widths that are right on target with what was historically mined. And I think this is one of the reasons that Hochschild was so excited about the project. We took them on an underground tour, and they were saying, yeah, when you're underground, you're able to see the continuity in the veins. So we're going to wrap up our drill program at SK Creek, and then we'll head back underground at SNIP. One of the nice things about having access to the underground workings is that you can drill year-round, which is a bit of an anomaly for the Golden Triangle. So I just put this slide on here because we've really just been focused on the twin zone, which is off to the right, and the 200-foot wall, but there's an amazing amount of exploration potential left across the project as a whole. We think the trends continue off to the west, and this should give you an idea. The main twin zone that I mentioned is that area in blue there, and it's 200 meters by 400 meters. The strike of the twin zone is traced for about 1 kilometer on trace, but the actual majority of the mining, that 700,000 ounces, came out of a 200 by 400 meter area. So this just kind of shows you where else you could potentially fit another twin zone on the project. So we have a lot of exploration potential left, which we hope to do through underground and then a surface drill program next summer. So that's a quick overview. As I mentioned, we just wrapped up surface drilling at SNIP. Now we just wrapped up underground drilling at SNIP. We're doing surface drilling at SK Creek. We'll go back onto underground at SNIP, and then that'll be in preparation for a maiden resource estimate, which should come out probably in Q1 of 2019. So a bit about our capital structure. I'm sure, along with every other company here, we feel we're very undervalued right now, but I guess it's a good buying opportunity. So please come out to the booth and ask me if you have any more questions. Thank you.